Good day, all. Ira Epstein of Linn & Associates with your metal market wrap-up, and this wrap-up is for Tuesday, the 27th of July, 2021, just getting on to 6 p.m. Central Time. So tomorrow morning, not too much. We have to worry, though, in the afternoon about the FOMC meeting. The statement comes out at 1 o'clock. At 1:30, we get the press conference with Fed Chair Powell, and what's he going to say? My guess is the market will digest that the Fed members are starting to talk about tapering. The word is starting to talk. But with COVID cases as bad as they are in different parts of the United States, why would they unleash the tapering right now? I don't see it. That doesn't mean I'm right on this, but I just don't see it. In fact, if anything, I see that this could slow things down even further, and the Fed says, yeah, we'll talk about tapering, we'll have our plans, we're well planned, but that's down the road, and we don't know when it is. There's too many uncertainties. That's how I think the market's going to address things. Stock market down a little bit tonight. Gold all over the board, but trying to basically hold the 1800 level. Silver trying to catch up a little bit to gold. It took a beating against it today. And the copper market, well, it's caught now between the, say, high 440s and the 460 area, back and forth there. When we look at a weekly closing chart of gold, it is still under the 18-week moving average of closes, which is 1809.10, which keeps the pressure on the market down. When we take a look at just a chart of December gold on its own, you can see that you're in a congestion zone. And on that congestion zone, you still have the pattern of lower highs, lower lows. Now, there is one factor here that is at work. If we step back and we look at this day, right here, and that was on Friday, the 23rd. I have a rule that doesn't mean it's right, but I have a rule that if you take out the high of an outside day down within the next two trading sessions, which happen on Monday, until you take out this low of Friday, the market is building a pattern to capture shorts. And if it goes back up, it often goes to the 18-day average of closes, which is back up here at 1809.80. It would just be interesting if that's what the market did. What it's done in the meantime is what I've been telling you since I got back yesterday. We're caught between the 100-day average and the 18-day average of closes. To get anything going to the upside, you've got to clear this 1816.10 to get anything going to the upside. To get things going to the downside, I think if you broke through Friday's lows, you'll quickly be into that 1790 level. And momentum in the market is oversold, making it difficult to attract new short sellers at this point. You either have to embed that or get rid of the oversold condition. One of the two is going to happen. The gold-silver ratio, as long as the market is trading over the red line, it means that silver is losing to gold. And when you look at the chart, that's pretty evident. Even if silver tried to get something going, it's got so many layers of resistance from the 18-day average, the 200 right here, the 2640, the 100-day, and the upper Bollinger Band. On the other hand, in a positive vein, the market keeps hitting the lower Bollinger Band and doesn't go through it, and it remains oversold, not yet converted or trying to convert, really, to becoming embedded or locking into a further bear trend. It can happen. In copper, you had 3 days in a row in the SEP copper of over the 18-day average in an overbought condition, as you see here. Anytime the slow stochastic has a reading over 70, and both numbers aren't going sideways over 80, it's overbought. I look for the market to pull back. I count each consecutive close over upper Bollinger Band as taking away one of the 5 percentage points, because 95% of the time, which means 5% of the time, the market will stay over the band with 95 under it. So it's used up 3 of those percentage points. You really rarely get up to 7 or so in the futures. When you do, it's a sign of just super strength. You're seeing the strength already, and you had also a bullish crossover taking place. Notice how the 18-day average has gotten over the green line, which is the 100. That's another bullish element. Very overbought, but I think you're laying the groundwork for a bull market here. In the platinum market, lower highs, lower lows. You've hit your downside target. You're oversold. There's no reason I see to get aggressive on the short side against the Bollinger Band, and you have no reason that I can tell there to be bullish. In the palladium, the trend is down. You've got your lower highs, lower lows. You've hit the lower Bollinger Band. You're oversold. You may go for the band again, but there's nothing here that's friendly at this point in time. You'd have to close back over the 2740 level in order for me to say, okay, maybe this market has overdone it to the downside. It wants to reverse. In the dollar, for all those bulls that were saying, well, we're just going straight on up, suddenly the dollar's in a downtrend. Will it last is the problem. If it weren't for the FOMC meeting, I know that I'd be telling my subscribers, hey, you want to be short. I won't say that in front of the FOMC meeting. All I'll say is, I think we'd be very cautious, let the meeting get biased, and we'll take a look at how the market reacts. In Ethereum, the first challenge of the Bollinger Band and the 100-day average was where the market failed, and it's come back down. It's overbought, void of trend. Lower low, higher high. It's really gone from the lower band to the upper band, just back and forth here. No follow through down. So far, no follow through on the upside. That's what I call that psychiatry trade. You get caught in these bands and you go, why isn't it following through? And it just makes you nuts in the process. So you put it all together, and obviously you want to be a bit cautious. But that's what I teach in my charting course. You know, if you're looking for a trading discipline and want to put together some indicators to create a trading idea, be it stocks, futures, ETFs, I think I have a method for you. It starts with swing lines, which is an indicator that I wrote that I show you here in all these videos. Then I apply moving averages to it. We start filtering. We're going to get the slow stochastic. We're going to use that as the momentum oscillator. We're going to look at Bollinger Bands for a profit objective and one more set of objectives, and that's going to be window envelopes, because markets don't always go to the Bollinger Bands. More times than not, they'll go to the window envelopes. So you want to get some ideas there. It's 54 videos, about 8 hours of charting. And you see the video. I start you always off with a basic video that talks about concept in PowerPoint form. Then I march you into the charts. And no, you're not always going to see a name on a chart. I don't want you to think back, what did that chart do? I want you to look at patterns and learn to recognize what's going on with them with these indicators. There's 5 indicators. You're not going to get confused. Now, you get access during this, if you take the course, to my written updates. If you haven't had them before, you're going to get them anyways. You're going to be able to get our charting course, in other words, with the necessary charting software that you need to follow me with all these indicators built in the way that I want them. How do you find out more? Go to our website under the word education. All my courses are listed there for you. You can always call my staff and they'll work with you. I'll see you tomorrow, and remember, tomorrow night will be the interesting review here when we see what the Fed says, does, and how the market interprets it. Take care.